Crude pops, gold drops, crypto flops as Nvidia suffers worst week in 2 months. By Tyler Durden. Friday, June 21, 2024, 3 p.m. The biggest quad which ever saw a tight trading range outside of the open and the close. A chaotic start as $3 trillion notional options expired on the open left stocks to tread water for much of the day, even as bond markets suddenly gave a shit about flash PMIs, until the volume exploded into the close. It was another ugly week for U.S. macro data overall, with the Bloomberg Economic Surprise Index tumbling to its weakest since February 2019. Source: Bloomberg. But the decline was dominated by hard real data, worst since September 2022, while soft survey data improved off 9-year lows. Source: Bloomberg. On the week, the Dow outperformed while Nasdaq lagged as Monday's huge squeeze higher saved the entire week. The fun and games were not over until the last second. The Nasdaq Composite Cash Index closed last Friday at 17,688.88. Thanks to some last-second shenanigans from the machines, the Nasdaq Composite Cash Index closed this week at 17,689.36. Plus 0.48 points or 0.002%, to ensure the 8th positive week in the last 9 weeks. Source: Bloomberg. Utes and real estate were the only sectors to close down on the week as energy outperformed. Source: Bloomberg. Nvidia suffered its first down week in 2 months. Goldman Sachs said that their floor tilted minus 22% better for sale, driven by supply within the ELO community. But, they highlighted that as expected, some massive opening prints with Quadwitch, and noted that the close will be 5x. We did have asset managers take advantage of these opening prints. ELOs are currently minus 6% better for sale. Supply from this group is largely being driven by infotech, healthcare, and consumer names. HFs are slightly better to buy, led by consumer disc and healthcare. HFs are modestly selling fins, REITs, materials, and energy. HF trading during first 30 minutes driven by factor models. Little MO drawdown mostly concentrated in tech with MU NVD, AVGO, QCOM underperforming versus TXN NTC, on MCHP outperforming. Stifel's Barry Bannister says the U.S. stock benchmark has a shot at reaching the 6,000 mark before the end of 2024 as investors keep piling in, up from just below 5,500 Thursday. But by mid-2026, he expects the gauge to sink back to where it began this year, around the 4,800 level, erasing a fifth of its value. To be clear, the forecaster says risk assets, and equity markets in particular, are due for a correction much sooner. His official year-end S&P 500 target stands at 4,750, implying a drop of some 13% from today. The index retreated after touching all-time highs Thursday as technology shares came under pressure. Still, the euphoria among investors that's powered the market for months is set to propel shares higher before they eventually plunge, he says. Timing is everything, Bannister and his team wrote Wednesday in a note to clients, and we are aware that investors may be in full-fledged bubble/mania mode which looks past our concerns. Bannister is not alone as Mark Spitznagel, the founder and chief of Universa Investments, said. I've been saying this for a year and a half because people got 2022 so incredibly wrong, we're not in the 70s. The Fed recklessly popped the greatest credit bubble in human history, and now as people realize that the Fed needs to about face, they're going to get increasingly duped the other way in a face-ripping rally. At the point of euphoria, which is coming, the high will be in and the market will crash worse than the global financial crisis. What matters more than my views on this are how Universa's clients are positioned for it, for both a face-ripping rally and for the worst crash since 1929. Is this week's Nvidia weakness a sign of things to come? Source: Bloomberg. Or is the macro picture signaling something that stocks don't know? Source: Bloomberg. Looking at U.S. bond yields trade this week, it's clear we are entering the illiquid summer season as yields snapped and crapped constantly to end the week marginally higher. Source: Bloomberg. But, on the bright side, at least they're not French where the OATS spread exploded to its widest since 2012, the EU debt crisis. Source: Bloomberg. U.S. rate cut expectations for 2024 and 2025 were basically unchanged on the week. Source: Bloomberg. The dollar ended the week very marginally higher. Source: Bloomberg. Bitcoin suffered this week with ETF outflows for 5 straight days. Source: Bloomberg. Bitcoin fell to $64,000 and found some support at 6-week lows. Source: Bloomberg. Gold was performing well all week until this morning's hot PMIs, which sent the barbarous relic into the red. Source: Bloomberg. Despite a dip today as contracts rolled, the front-month WTI futures price rallied up to its highest since April this week. Source: Bloomberg. Finally, Messrs. Biden and Powell may be about to have a problem. Source: Bloomberg. As pump prices are about to chase wholesale gasoline prices and crude prices higher. 14-84433. More market stories on Zero Hedge. For the first time since the financial crisis, CMBS investors face Europe's first AAA loss. NJ Transit, Amtrak issues spark travel nightmare during rush hour. The music just stopped. Japan banking giant Norinchukin to liquidate $63 billion in treasuries and European bonds to plug massive unrealized losses. Show comments. Discrimination notice. Privacy policy. Disclosure. Disclaimer. Privacy and cookie settings. Advertise with Zero Hedge. Copyright 2009-2024 ZeroHedge.com/ABC Media, Ltd.